Tata Motors, the bottom line in the third quarter has taken the street by surprise. But the closer look at the numbers will show that it's not been an operationally strong quarter. Forum Bhatt is here to take us through those details. Forum, what stood out and what didn't?
So the company reported weak set of numbers operationally, but it was profit which clearly stood out this quarter. So if you take a look, revenues were down 6.8% at 71,676 crore. EBITDA was up 20.68% and margins were at 10.31% versus 7.96% a year ago. But this time around, the company reported a net profit of about 1,738 crore rupees as against a loss of 26,993 crore a year ago. Now remember, this year, last time, the company had taken an impact of the impairment in JLR. That is what clearly impacted the profits last time. But this time around, it was the lower raw material cost and lower depreciation which led to the profit growth for the company. Continued growth in JLR is what stood out this time as well, and that drove the overall growth for the company. Standalone numbers, on the other hand, were pretty disappointing this time around. Now, looking at some of the key highlights in JLR, the revenue was up 2.8% at about 6,400 million pounds. EBITDA margin stood at 10.8% and PAT was at about 372 million pounds. Now, China retail sales grew up 24%, which is what drove the revenues for JLR. Strong product mix is what aided the margin growth, and profits were seen up due to higher China volumes, stronger product mix, lower operating cost, and foreign exchange, which was favorable this time around. Other than that, the company had also conducted a conference call post the earnings or on the numbers. So let's take a look at as to what management had to say on that. Now, the management expects to deliver about 3% EBIT in JLR in FY21. But on the coronavirus situation in China, what they stated was that they are clearly going to keep a close watch as to its impact on the numbers. And as the management says that this might have a negative bearing on the EBIT margins going forward. Now, JLR is also expected to incur a capital expenditure of about 3.6 billion pounds in FY20 and 4 billion pounds in FY21. Now, the company has also launched the next phase of Project Charge Plus, which aims to deliver a further 1.1 billion pounds in cost savings over the next 15 months to March 2021.
Okay, and just wondering, post these numbers and what brokerages have said as well, are dealers talking about any kind of reactions that are anticipated on the stock?
Well, not really, Neeraj. I'm not clearly aware of what the brokerages has to say on what the how the stock will react this time around. But clearly, the numbers were not quite, good as to what it was expected. So let's see how this pairs out.
Yeah, I'll tell you, some of the dealers that we spoke to, actually one or two analysts that I spoke to late evening did mention that commentary from Tata Motors around what happens in the near term would be a key determinant of how the stock shapes up as well. Not as much just about the numbers, because as Forum said, bit of a mixed bag. Net profit standing out operationally not the strongest. Thanks, Forum, for putting that into perspective.